Hey everybody, this is Jim at SP500chart.com. It's about 5:40 p.m. on March 19th, 2013, and we're going to take a look at the S&P 500 chart as we do every Monday through Thursday right after the close. And to remind you that on Fridays we do a video over the weekend at some point. No real hard schedule for the weekend video. It just comes out over the weekend. And that takes a look at the entire week as well as what took place on Friday. The idea being that subscribers get the Monday, Tuesday, Wednesday, and Thursday videos right after or soon after the close, and then everybody gets a video over the weekend so you can figure out if this is worth anything. I think it is, but you got to make up your minds. That said, let me read this before we take a look at the chart. The website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. Honest to goodness, I'm just a guy who draws lines on charts. So let's see what the lines look like today. Okay, looking here at a 30-minute chart. Interesting to note, the S&P was down. The NASDAQ was down. The Dow was up. Not by a lot, but the Dow was up. Look, I'll show you. See, there you go. Dow was up about 0.03%, where the S&P was down marginally. Here's the Russell. It was down. You see now the Russell is actually gotten underneath its channel line. Kind of a similar situation to the S&P. And NASDAQ was also down significantly. Here's the NASDAQ chart real quick. Each of these charts has lines drawn in different areas. And the funny thing is, I should, but I don't really track this chart like maybe I should. But let's focus now on the S&P. I made the comment in the last couple of videos that when the S&P reached this level up here at about, come on, don't do that to me. Sorry, not your problem, it's my problem. This little crosshair thing, if you click it in the wrong part of the chart, it thinks you're grabbing one of the other items instead of doing what you want it to do. So you see the S&P topped out at about 1563 and small change, very close to 1565. And that's about what we were expecting from this inverted head and shoulders pattern. Let's see, maybe there's another run up here to really make that a solid hit on that minimum level. But obviously today the market was showing weakness, and it got kicked off really when we started to break these support lines, both this light blue one and this red one. I'd made mention of the fact that we broke this red support line when we made this inverted head and shoulders pattern, and it almost looks like what we had for about 1, 2, 3, 4, 5, 6, 7, 8, 9 days was just this little winding around almost this broken support line. The S&P could not get significantly above it, but then it also didn't want to go significantly below it. So it was like it was just kind of twisting and turning around this line. That eventually gave way to selling pressure on yesterday's open. And really, I don't know how good these two orange lines are going to work, but I've drawn them because right now it's all we got as far as trying to ascertain if we are getting a descending channel. It could be this is it. It could be that we need more information. But I put it on there, like I said, for what it's worth. It looks like we have 1, 2, 3, 4 touches on this top line and really 2 on the bottom. Let's see how well that holds up. I'm not putting a lot of stock, no pun intended, in this quite yet. Now, as we look at the chart, I need to just remind you of a couple simple things. These broken these broken support lines, both this light blue one and this red one, now should serve as resistance. So that means at this point we have a rising resistance line that is clearly broken. Of course, it broke back here, but you could see it never really got technically significantly above that line ever since it broke. Now it's broken again. My guess is this will serve as resistance again. The question really becomes, where do we expect support? So we've got this brown line which is drawn over most of the significant intermediate tops of the past 4 years, and the S&P got over that line back in 2011. We're back over that line now, and because it's a rising line, you can't count on that providing much support on a test of this line. But what we do have, I believe, as potential support is this neckline from our inverted head and shoulders pattern right here. That's at about 1526 or so. Then we have a rising support line. If we go to a 2-hour chart, it gets a little wonky and a little misplaced, but you can see that this line is drawn under the lows of mid-November and the lows of late December, and it comes very close but not quite to the lows of late February. Now guys, everyone knows that trend lines are created to be broken. So when I say that there is potential support at a rising trend line, that is not a guarantee. But what it means is if we get down to this rising trend line, let's look at it on an hourly chart. If you come down to this line, that may be a good place, especially if it were to happen in next week, in the middle of next week. If we come down to this line and you start to see signs of the market firming up, either a decent bullish candle off that line or a pattern that develops, then what that means is that's a good place to get involved in a low risk trade. And I say low risk because you're buying at an area where you would reasonably expect a good bounce. If that bounce doesn't happen, then you are at an area to where you can take a small loss if and when that line did break and the trade goes against you. So that's the idea. The idea is to be patient, wait for the market to come back to a level where you feel that that's where a bounce should take place. And if it takes place, then you've made a good trade. If it doesn't take place, then you have a boundary to where you are saying, well, the thesis or the idea behind the trade is no longer valid, so you bail before there's too much damage. I'll give you a good example. Here's a chart for GLD. And I was looking at this and I saw that here we had a top, here we had a top. I extended this down. We had support down here just in the high 140s, around 148, 149. But I saw that we got over this line right here that served as resistance on 2 occasions. And that we came up to this line, which would be, this was resistance. Now it's broken. We would expect it to be support. So when we came back to this line, I went long. And so far it's looking like a decent trade. Looking at an even smaller chart, I did not buy right here. I bought at 152 and change back in early March. So anyway, just to make a long story short, I've got a stop that's back just a little bit under those all-time lows. So I look at it like I can maybe make a decent percent, or I'm going to lose about 2.5%. But the idea again is waiting for some of these lines to get tagged, so now I think I've got a reasonable expectation of this trade working in my favor. So once again, looking at the S&P, we have in a few days we start to see areas of expected support, and as a matter of fact, we have two that will be touching each other in about 1, 2, 3, 4, 5, roughly 6 to 7 trading days. It looks like there could be a significant bounce in the low to mid 1520s. So let's see if that happens. But right now, the S&P is a little bit in limbo. We're not at resistance up here around 1565, and we're not at support down at around this first level around the neckline of this inverted head and shoulders pattern. So I just think maybe a little bit more patience, a little bit more waiting, and if we come down to this level, let's see if we get a bounce, and also let's see if we get there, if we get there, if we have a little bit more information to go on that helps us to be a little bit more precise with a potential channel, because that sure would be nice if we had a downward channel that would break out, and then we would have an even clearer sign that the S&P is firming up and it's ready to move on. So guys, I think that's the video for today. I appreciate you taking time out of your day to watch this. By the way, there you go again. There's that channel, and you can see that gap down yesterday, coming back up to it, trying to get over it. Then a fairly rapid little sell-off there of about 10 points over a short period of time. Then it looks like a little firming up. Let's see if the S&P rallies back to the very low 1550s tomorrow, and if it does, let's see if it gets turned back again. So look, guys, thanks for watching. Thank you for your subscription. If you're watching this on Tuesday after the close, if you're watching this over the weekend, and you're looking back and you're saying, gee, that might have been decent information for me if I'd seen it on Tuesday early evening, Eastern Daylight Savings Time, well, come on over to sp500chart.com, see just how affordable a subscription is to seeing these videos after each day's close. Thanks. Take care.